Welcome to the world of investing, where names like Warren Buffett are hailed as the investment gurus of our time. Now, who is Warren Buffett, you might ask? Picture a young boy from Omaha, Nebraska, who turned his knack for numbers into an empire worth billions. Yes, that's Buffett for you. This investing genius didn't just stumble upon a gold mine. He built his empire from scratch, brick by brick, using his simple yet effective strategies. His magic formula? Well, it isn't as complex as you might think. Buffett's approach to investing is straightforward and easy to understand, making it accessible to everyday investors like you and me. He's not about fancy financial jargon or complex algorithms. He's about smart, calculated decisions. So, how did Warren Buffett become an investment genius? Let's delve into his advice for investing small sums of money. The journey of 1,000 miles begins with a single step, and in Buffett's case, a modest sum. Warren Buffett, the Oracle of Omaha, often advises to start small in investing, a sentiment that may seem counterintuitive to some, but one that underscores the wisdom of this investment titan. Buffett's wisdom lies not in chasing the next big thing, but in the humble understanding that every journey begins with a single step. So too does the journey towards financial freedom. It's not about how much you invest initially, but rather that you start the process of investing. You see, the act of investing is not just about putting money into stocks or bonds. It's about developing a mindset that understands the value of money, not just as a means of buying things, but as a tool for creating wealth. So when Buffett talks about starting small, he's really talking about starting to develop that mindset. He's encouraging us to take that first step, regardless of how small it might be, whether it's $1, $10, or $100. The point is to start. Now let's talk about why starting small is so powerful. This is where the concept of compound interest comes in. Compound interest is the process by which the money you invest earns interest, and then that interest earns interest on itself. Over time, this can lead to exponential growth. Let's take a simple example. If you were to invest $100 today with an average return of 7% per year, in 30 years, that $100 would have grown to over $700. And that's just with a one-time investment. Imagine if you were to invest $100 every year or every month. Over time, those small investments could grow into a substantial amount. So you see, starting small isn't about limiting your potential, it's about unlocking it. It's about understanding that the journey to financial freedom isn't a sprint, it's a marathon. And the key to winning a marathon is to start running. Now that you understand the importance of starting small, let's explore how to make those small investments work for you. Investing small sums of money might seem insignificant, but as Buffett says, someone's sitting in the shade today because someone planted a tree a long time ago or so. Warren Buffett's investment philosophy is simple, yet incredibly effective. He advocates for investing in low-cost index funds, a type of mutual fund or exchange-traded fund that aims to replicate the performance of a specific financial market index. These funds are a great way to start investing with small amounts of money because they offer broad market exposure, low operating expenses, and low portfolio turnover. Buffett's approach also emphasizes the importance of diversification. By spreading your investments across a variety of assets, you reduce the risk of losing all your money if one investment performs poorly. Diversification doesn't guarantee profits or protect against loss in declining markets, but it is a sound strategy for long-term investing. Speaking of long-term investing, patience is another key component of Buffett's strategy. He once said, "The stock market is a device for transferring money from the impatient to the patient." This underscores the importance of resisting the urge to react to short-term market fluctuations. Instead, focus on your long-term financial goals and invest consistently, regardless of market conditions. And let's not forget about Buffett's advice on personal finance. He urges people to avoid debt and live below their means. This might seem like common sense, but it's surprising how many people overlook these basic principles. By avoiding debt, you free up more money to invest, and by living below your means, you create the financial cushion necessary to weather unexpected financial storms. Buffett's strategy is not about getting rich quick. It's about building wealth slowly and steadily over time. It's about planting that proverbial tree today so you can enjoy the shade tomorrow. By following these steps, you can start investing small amounts of money wisely, just like Warren Buffett. So you've learned how to invest small sums of money the Buffett way. Now what's next? Well, it's time to put those lessons into action. Start investing, no matter how small the amount may seem. In the world of investing, it's not always about the size of your capital, but rather the consistency and the length of time you're in the game. You might be thinking, but Joe, but I only have a few dollars to spare. Surely that won't make much of a difference. It's a common misconception, but let me assure you, even tiny sums can grow into substantial amounts over time. Consider this: if you invested just $5 a week, that's $260 a year. Over a decade, that's $2,600, not including the interest or returns you'd earn from your investments. Now compound that with the magic of consistent investing and the power of compounding interest, and you'll see how your small sums can grow into a tidy nest egg. Remember, investing isn't a sprint, it's a marathon. It's not a get-rich-quick scheme, but a long-term strategy for financial stability and growth. Starting early is also key. Time is an investor's best friend. The earlier you start, the more time your money has to grow. So whether you're in your 20s, 30s, or even in your 40s or 50s, it's never too late to start. But the sooner you begin, the better. In the world of finance, there's an old saying, the best time to plant a tree was 20 years ago. The second best time is now, so don't delay. Start investing, even if it's just a small amount. You'll be surprised at how much you can accumulate over time. Remember, the journey of 1,000 miles begins with a single step. So take that step today and start your investing journey. As always, we have more personal finance tips on our channel, so stay tuned for more.